the statistics would seem to indicate that the recent strength in gold, and by recent I mean the last 2 years, has been more a function of central bank buying than retail buying, even in China. The Chinese market, and to a lesser extent the Indian market, has seen more retail buying than the US market, which has in fact seen retail selling. But the statistics would suggest that the buyers of gold in real size have been foreign central banks, reacting, I suspect, by the US government's attempt to weaponize the US dollar, whether it is seizing $300 billion worth of Russian holdings of US Treasury securities, which should make any country that holds its wealth in US Treasuries concerned, or the weaponization of the SWIFT banking system by the US to reinforce sanctions. Whether or not, as an American, you agree with those policies or not, they're disquieting to foreign central banks who have suddenly come to understand that denominating all of their foreign currency transactions and their national savings in US dollars and US Treasury securities is not a good thing. Um, with regards to the difference between Chinese buying, that is Chinese retail buying, and US retail buying, the Chinese government has an official policy of encouraging their savers to save, among other things, in gold, which is to say that they have facilitated gold transactions and encouraged it after a policy many years ago of making it illegal. So there's probably an awful lot of pent up demand in China, which is also facilitated by the Chinese government. And as you say, the weakness in the renminbi has meant that while gold has done well in US dollars, it's done very, very, very well in renminbi.
In a recent discussion, Rick Rule sheds light on a concerning trend: the surge in central bank buying of gold, particularly by China, as a strategic response to US policies. With statistics indicating a shift towards institutional rather than retail buying in the gold market, Rule suggests that China's move towards gold accumulation is a direct reaction to US attempts to weaponize the dollar and seize foreign assets. This trend, if continued, could have significant implications for the US economy.
Correct. I think, in fairness, that we haven't left them many choices. Uh, Gold has traditionally been both a store of value and a medium of exchange. That's important to understand. While it doesn't provide a yield like US Treasuries in terms of being a savings instrument for the Chinese central bank, it provides them more security of principle than other currencies of trading partners that they may have, the Russians as an example, or the Chinese. So gold is, I think, for the Chinese central banks and for many other central banks, fulfilling its traditional role, both as a medium of exchange and as a store of value. Imagine if you were the Chinese and you ended up with several trillion rubles and you didn't have the ability to spend on anything from Russia. When it was efficacious for them to denominate their trade in US dollars, they did it, and they did it comfortably for years, and they were for years the largest holders of US Treasuries. The relationship between the US government and the Chinese government now probably leaves the Chinese no choice but to reduce their holdings of US Treasuries and substitute gold for that asset class. I'm not a foreign policy analyst, and I'm not a military analyst. I am pretty good at looking at statistics around gold and the response by central banks around the world when they feel that their own self-interest is threatened by the US government are responding by buying gold. It will be interesting, I think, if retail buying in Western Europe and North America begins to follow through on top of central bank buying. All of us around the gold community looked at who the former buyer of gold was when gold was strong, which is to say individual savers. This is really a new phenomenon for us, to have the market being led by institutions. We all thought that gold was the anti-institution instrument. but it's strange to see
Yeah.
the strength in gold led by institution with thus far very little retail follow through. If you layer retail follow through on top of this institutional strength, because both constituencies have an interest in gold, I think you could see a very, very interesting move.
Continuing the discussion, Rick Rule stresses the importance of gold as a store of wealth and insurance against mounting debt levels. Rule warns of the potential consequences of unsustainable government debt, drawing parallels to the inflationary pressures of the 1970s. With the possibility of gold prices soaring to $7,000, $8,000, or even $10,000, Rule urges individuals to consider owning gold as a safeguard against economic uncertainty. Moreover, he discusses the unique investment opportunity presented by silver stocks, likening them to coiled springs ready to unleash significant upside potential.
Yeah, I have two comments there. The first thing is when people say that gold is broken out to new all-time highs, they're talking about nominal highs, not inflation-adjusted highs. Work that I have seen by the World Gold Council suggests that in constant dollars, that gold would have to break out above 2,700 to get to new real highs. It's interesting that when people talk about money, they don't talk about money in terms of the constant. And when you talk about gold, you are talking about the constant. So my suggestion would be for gold to take out the old highs, which I think it will do, it would have to go through 2,700. But your bigger point is more important. For me, gold isn't a trading vehicle. For me, gold is a store of wealth, a medium of exchange, liquidity, and insurance. And I own gold because I'm afraid of our incomprehensible debt levels. I own gold because the interest expense of the US government is, I think, and I say the US government, but I could just as well say the EU or Canada, uh, is going to overwhelm our ability to sustain it. I'm old enough, Daniela, that I remember the decade of the 70s. We dealt with it by inflating away the purchasing power of the instrument that the debt was denominated in. Over the course of the decade of the 1980s, the purchasing power, constant purchasing power of the US dollar declined by 80%. I think that that sort of thing is precisely what's on offer now. If that's right, and I believe it's right, if that's right, you could be talking about a gold price that was $7,000 or $8,000 or $9,000 or $10,000. Am I saying gold is going to go to $10,000? No. But I'm saying that there is a strong enough possibility of it and the consequences of that for you maintaining your lifestyle with a US dollar denominated balance sheet would be very unpleasant. So I think that people who are concerned about those things need to own gold. And I think that that message circulates well. And I think for better or worse, the gold price goes higher and perhaps much higher. What I told people about silver was that traditionally silver followed gold, that gold needed to move, that the narrative needed to be established by gold, and then silver would follow through. What I tried to say in the interviews that I think you're referring to were that the silver stocks were truly a coiled spring.
Mm.
There was so much hate around the silver stocks, probably as a consequence of their fail during the 2020 and 2021 silver squeeze. I like to say there's no hate more sincere than the hate of a jilted lover. And silver and the silver stocks certainly built up a lot of jilted lovers, young jilted lovers, particularly passionate ones in 2020 and 2021. The consequence of that is that the silver stocks got way, way oversold. In my career, that's happened three times before, and I'd adore to see it happen again. I own gold or physical bullion, I guess, as insurance. I own the silver stocks as a speculator, and describing them as coiled springs, I think is really accurate. There is not enough market cap in the legitimate silver stock space to handle the capital that will come into the space if the generalist investor buys into that narrative. I've seen that happen before. I remember the early part of the decade of the 90s, that move in silver, when things like Pan American silver went from 50 cents to $45, silver standard from 72 cents to $45. I'm not saying it's going to happen again, but I'd sure like to be part of it if it does.
In today's discussion, Rick Rule shed light on the recent strength in gold, attributing it to central bank buying rather than retail activity, especially in China and India. He emphasized gold's role as a store of wealth and insurance against economic uncertainties, cautioning about inflationary risks and the potential for gold to reach $10,000. Additionally, Rule highlighted the potential of silver stocks, likening them to coiled springs ready for a surge. Don't miss out on valuable insights like these. Subscribe, like, and share your thoughts in the comments below.